Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
Hey, what's going on, Ian?
What's up, dude? How you doing?
Not too bad. Nice and sunny October 23rd out there right now. Thanks to everyone who's checking in with the Real Estate Reserve Podcast. Going to have a fun show yet again for you. As always, please share this broadcast if you're watching this live or you're listening to this live. And any questions along the way, feel free to chime in. This is an open mic, open forum. It's we have a lot of fun doing this. Today we're jumping into some title company talk. So curious to ask, which title companies do you like to work with? What's important to you about working with a title company? But first, we should probably introduce ourselves just in case this is the first time somebody's tuning in, right? I'm Jason Balin from Hard Money Bankers. This is Ian Horowitz from Equity Warehouse. We've been doing this show live over the last few months since COVID hit. We've, not a huge agenda, just kind of talking live with local real estate investors related to what's on our mind and, fun things that have happened out there. I'm a full-time hard money lender. Ian is a full-time property owner with mostly rental properties throughout the local area. So we got a lot of fun on this show. If you're watching this on Facebook, feel free to comment below on the Facebook feed and your questions will pop up. It'll look like this. Happy to answer your question or comment on the show live, and we can do our thing. If you have a question and you don't want to chat it and you want to actually hop on live with us, ping us through that channel as well, through the comment section, and we can add you live on here as well. And we can, potentially, have your mug next to our mugs up in here. So let's. You got anything else to add, Ian, before we hop into some title company stuff?
Want to let everyone know this is an interactive show. So if you do have a question, comment, concern regarding title companies, what we're talking about today, just shoot us a link and Jason will get you the information and we'll bring you up on here. If not, we're always open to new guests. So if you have something that'll be valuable or you have a question, you want to work through a problem, you have something going on, you want to walk through a case study, whatever it may be, we'd be happy to have you on. This show is not only for ourselves, we learn all the time, but it's for everyone else out there. So if you can bring value or you have a question that other people that you think would learn from, we're definitely here to listen. And that's honestly how we wound up on title companies today. Someone from Jason's company, I think from his Philadelphia office, sent out a thing about vetting title companies. I said, what a great idea. We should talk about title companies because I feel like it's a piece of information that we skip over a lot. And I have different needs than, say, what Jason needs for his lending company. And I'd be really interested to see how he vets them on his end versus what we do.
Yeah, I think title companies in general aren't a sexy topic. Anytime you think about title insurance or maybe even homeowners insurance, real estate investors don't think of that as a sexy topic. To me, it is a sexy topic because it's important. It's one of the most important parts of the transaction. But every single person's worried about finding deals, finding money, things like that. And I get it. And that's obviously more important. Finding a deal is the most important thing. A good deal is always the most important thing. And then obviously finding the capital for it. But after that, you need to have resources, the proper resources. And a good title company is a proper resource. And obviously there's tons of title companies out there. So really, you got to figure out kind of which one's best for you. And obviously relationship based is usually a good start. Someone that is a relationship you're comfortable with, that you trust, that you have a relationship with, that's going to give you good customer service. That goes a long way. But like Ian said, his needs and my needs are different. So I'll kind of tell you a little bit about what I like out of a title company and what type of title companies we've used. And I'll tell you, we've done over 3,000 loans over the last 13 years, not including all of our flips and our rental properties and things like that. I've probably interacted with every single title company in the area. If you name someone, I probably have dealt with them over the years at one point or the other. So I look at it like this. So you got your big corporate-owned title companies that are large, and then you got kind of your small mom-and-pop one-off where there's a title attorney and maybe a processor, and that's it. I like to find someone in the middle. kind of in the middle of it. And again, I'm not saying that one's better or worse. This is my personal preference. I like to find title companies that are in the middle. And the reason why is when they're in the middle, they're big enough that they know what they're doing and they have a lot of experience and they have the resources to do it. And typically they probably have a few different title insurers that they write through. And on the other side, they're small enough that they can give you personalized service and be creative to help you one-on-one, right? If you're a big corporate company, just like working with any corporate company, right? It's tough to have individualized service. And if you're too small, they might not be able to give you enough service because they have too many files, or they're green, they're not 100% sure, or maybe they're only writing through one title insurance company, and that title insurance company won't give you proper title coverage for what you need for that project or building or house, that they won't be able to do it, right? Because they won't be able to flip it to another title insurer.
Yeah, and so on the topic of title insurance, I believe there's only a few companies out there. There's not a ton out there. There's only a few across the nation that actually do it. But for us, like when we got involved in real estate, what for title companies is usually most people go to a bigger corporation type because that's who all the realtors use. And you're not getting necessarily personalized service. But when you become an investor, there's other things that you need to start to worry about. Not so much in the single family world, there's some liability and some issues. But as you start to get into the commercial world, lot line surveys, ALTA surveys, environmental, entity structure, all those types of things become more important. When we got started, and I'd be happy to put his information out there, Jeff Charlo from Masters Title Escrow, we got real lucky. He's actually a lawyer who does the legal work, and he's a title processor. And for us, that works a lot better because everything's in-house, it's fully encompassed, and it works for us. We don't have to have a lawyer on retainer. We don't need to go out and get outside legal counsel regarding our legal documents, whether it's loan document review, it's operational, operating agreement review, those types of things. And someone that's familiar with the properties and what you're doing in your overall business, and as the title company, if an issue arises, for us anyway, it's a lot easier to say, oh, well, the lawyer was in-house. He understands everything. He underwrote the title insurance. He understands it. And if something comes up with the property in a refinance and you keep using the same person over and over again, they understand your file, they understand your portfolio, and they can get transactions done a lot easier. So that's what works for us. We've always stayed away from the, national title guys, like, I'd say some of the bigger ones. Like we've dealt with OSN and some of the bigger title guys, but there's just a lot of moving parts over there. And it's all on your needs and your wants, right? Like for us, when we were buying foreclosed properties, tax sale properties, stuff that had hair around it, you need a lawyer you need a title company that is looking to get the deal done and protects you at the same time. They're deal oriented versus say someone that's looking just to bill and get everything, every I dotted, every T crossed. There's going to be zero liability, and sometimes you can't get deals through, even though it's a common sense problem that needs to be resolved. And Jason, as a lender, I don't know how you feel sometimes about I don't want to say fast and loose, but guys that are looking to get the deals done and can see that stuff's been released, even though it might not have been properly released. You can see the chain of title that everything has been done. But a document got lost. We're dealing with.
Yeah, so I'll give you some perspective on lender's title insurance, which is obviously a little bit different than owner's title insurance. They're both very important. So many real estate investors don't even know what they're buying for owner's title insurance, and neither one of us are attorneys. Neither one of us run title companies. Not really, our business model. But that being said, because we've been involved in a lot of transactions, we've seen it. Now, keep in mind, like Ian said, there's a lot of title insurers, or title underwriters, you might look at it but like most people write through the same, Chicago Title, Fidelity National, Westcourt, WFG, First American, Old Republic, Steward, the things like that, right? A lot of them have other subsets under them as well, but Old Republic, but like I think there's maybe, the Steward family, the First American and Fidelity family, those have a bunch, and then there's a few independent ones as well. But regardless, you can go to the Sage or the Universal or whatever it is, and they're going to write through one of those. And most of the good title companies can write through multiple ones. And I'll give you an example. First American might not want to take the risk on a policy, but Fidelity might be willing to take the risk of the policy, right? Like, and what do I mean by that? Like, let's say there's a mortgage that's like 20 years old, they can't get a release. One says, hey, I got to get the release, and we can't get the release, let's just say. So the deal dies. The other one says, you know what, we'll take the risk, and we'll insure over the risk, stating that the title insurance policy will cover it if for some reason, that comes back to haunt people at a later date. So again, I think going back to what I said related to like a medium-sized title company, not a small, not a big, the bigger ones typically might not want to take the risks on stuff because exposure-wise, although maybe on the other side, maybe they do because they could absorb the exposure more. But it seems like, the bigger corporate ones want to be a little bit more strict. The smaller ones, maybe a little bit fast and loose, and then someone kind of in the middle. But again, like it depends on who it, and who it is. I mean, the interesting thing here is I've worked with a lot of local title companies, and most of them are pretty darn good locally, in my opinion. I've worked with a lot of them, and based on my needs, they're good. Now, I don't need them to do what Ian does related to potentially putting a promissory note or something related. I just need them for title insurance. So like to me, my needs are they need to move as quick as possible, right? Meaning like they need they need abstract in-house. They need, they need to be able to expedite stuff through the courthouses if they need to quickly. So I need speed, and I need good customer service to keep everybody up to date. Because again, most, give me 1 second and then you're up. So again, most of the times timelines that need to be hit, let's say you have a distressed seller, right? And it needs to close next week, and you can't get title in that quick. That's okay. As long as everyone's communicating, these rush files typically can be worked out. But that being said, it needs to be communicated, right? If the title company can't get the file, let's say the expectation is you got to close in the week, and the title company, has an issue with the abstract or something, right? The courthouse is closed because COVID or whatever it is. I think an important thing where title companies win business is they reach out to the seller and explain the situation, and not the buyer explain the situation. Because let's say I'm buying a property, I look like the bad guy if I can't get it to closing because I can't get title quick enough. But if the title company jumps in, says, hey, listen, we might need a few more days. We couldn't get your release from your mortgage. Can you help me with this? Then it's okay. It's not a problem. But the customer service thing goes a long way.
Yeah, and I think something that you hit on, most of the local title companies are good. They're good because they're working in their local market, right? Like someone coming down to Baltimore to understand and work in the city, and they're not, they're a big national corporation, and they don't understand, say, our ground rent, right? And they have an issue understanding how to redeem ground rent. That's something that a big, large title company might not understand, or they might not understand taxes in the city or whatever it may be. And sure, they have their checklist. But dealing with that local title company goes a long way because they're all down at the city agencies, and they all have people that they can call and get stuff to get your deal across the table. And I think that goes a long way, and it's something that you should strongly consider. And I'm not saying the big guys can't service you, but there's something to be said for the ones that have lawyer in-house. They have all their abstract in-house. Everything is under one roof, and it's one phone call, and you can get everything you need to get done. And another valid point that you hit of your title company being able to diffuse a situation if something is going sideways. Most of the time, most contracts do state, especially if you're an investor, that if there's a title issue, that it's going to be an automatic extension, because a lot of times it's not a buyer performance issue. It's actually a seller performance issue, and it might not even be a seller issue. Could have been a problem from previous ownership that your original title company might not have used. And I think that goes back to even another point that we should really discuss, is that you as the buyer here in the state of Maryland, for those of you that are in Maryland, you have the right to choose your title company. I know in a few other states, just listening to the guys that I know invest nationally, there's some states the buyer and the seller get their own title company. There's other states that, the seller gets to pick. Your taxes are the seller's responsibility, not the buyer's responsibility. So there's all different kinds of things that you need to understand, especially if you're going to invest out of market. I think a title company is a very valuable resource. We have a property in West Virginia. We have another one in Louisiana. And, having those title companies and understanding the market specific conditions helps us underwrite deals. And make sure we get to the closing table because, like you said, your buyer performance is your reputation, right?
Yeah, and also keep in mind, most buyers of properties, when a policy comes out, they just kind of take it and say, oh, cool, this is my title insurance policy. Like, that you're allowed to not necessarily negotiate, but like you can try to get the title company to add additional endorsements and sometimes fight to get exceptions out of there, right? And to make it better. So like for us as a lender, this is what our process is. Now keep in mind, the title company is not necessarily representing anybody, right? They're kind of moderating the transaction between the buyer and the seller and just doing the closing between. They're not legally representing you.
Before you go into your process, I got a good example of that. We're selling a warehouse in Baltimore. The buyer did not perform. We requested that the deposit got sent to us because it was a non-refundable deposit. They didn't communicate. And to go to that specific point, the title company is not representing one side or the other. They have, what is that called? Where they're required by the state. They had to actually send the money to the court because they are only the fiduciary for it. They can't send the money to me because I said, well, they didn't do their side of the contract. Now the court actually has to do it, and it has to be entered into an agreement, and the court has to decide who's awarded the deposit or not. So that is a very true statement that the title company doesn't always, you might think since you're the buyer and you picked them, it doesn't necessarily mean that they're always only fighting for you. They have a responsibility and a duty to represent both sides fairly. Yeah, no,
they're kind of the middleman in the situation. So they're not representing you, even though you might think that they are. And I'll give you an example. So as a lender, what happens is, title. Let's say the buyer orders title. We reach out to the title company and we send them our we send them our requirements typically ahead of time, right? So there's no last minute, roundabouts, but we send them closing instructions, and part of our closing instructions, they get the closing instructions after we see the title binder. But after we see the title binder, we typically mark up the closing instructions and say, hey, we would like you to remove this. Can you potentially do this instead of this? And now keep in mind, we have in-house counsel that does that on our behalf. And you could potentially, we'll talk about ways that you can do it as a newer buyer in a second. But, we reach out to them with requests. So a request might be like, hey, we don't know if there's any utility lines on this property or any easements on this property for utility lines, right? So an example like this. Now keep in mind, residential real estate is much easier than commercial, much, much easier. If you're buying a condo or a townhouse or a single family in an established subdivision, chances are all of these issues were already taken care of before the development, right? But that's not always the case. Sometimes you buy a property on a highway. Sometimes you buy a property behind another house, right? And you might not legally, even the driveway might not even be a legal entrance to get into your house. I've seen, landlocked deals before where, if you can imagine, let me draw it out real quick. But let's see. So, okay. It's going to be hard to see this, but like this is a landlocked deal, right? So this is a lot, and then this is a lot, and then this is a subdivided lot back here with a house. Well, there's no real entrance, right? This is the road back over here. There's no entrance to get to this house. So there might be some sort of like side agreement where they built a driveway for them, and that's okay. But the title company might not be able to give you title insurance related to access to that house. So things like that, right? So anyways, on a lender's side, we give them closing instructions and with everything that we would like. Now we can't always get those things. So we have to take a business risk sometimes and say, you know what, chances are nobody's going to come back and state this. But we try to get the title insurer to not put an exception in our policy, right? Because they could be like, you have clean title insurance, except we're not insuring that back lot you can get to it. Now, again, this is on the lender side, right? This only protects our interest as the lender. You as the buyer or the owner of the property, do that as well. Would want to do that as well. And again, like, I don't want you to overthink about this stuff too much. I just want to kind of go through the points. And then when you're reading a policy, you can kind of make that, determine what you want to do. But we do it on the lender side. And there's a lot of times that they'll be like, cool, we'll do it on the lender's policy. We won't do it on the owner's policy or something, related to that, right? So our policy might not have it. The buyers might. And again, a lot of real estate investors might not be able to retain counsel to do title review for them. But I would say that you should get in a habit of learning how to read title, look at your title, read it, and call the attorney and ask them all the questions and all the risks. And a lot of them are clean. A lot of them have very low risk, right? And they'll tell you, they're not going to hide it from you, right? What they are. And then you make a business decision. There's lots of loans that we do that we know that there could potentially be a risk, but it's a long shot risk. And chances are it's fine. I'll give you an example. Let's say there's an outstanding water bill for, there was a water bill that's recorded for $2,000, right? And they cannot get the final payoff of the water bill. This happens a lot. Water bills, utility liens, potentially things like that. And they can't get the final one. And you say, well, let's just escrow $4,000, right? Let's just escrow twice as much just to be safe. And the title company might come back and say, well, we don't know what it's going to be. We're not willing to escrow it. We're going to put an exception in your policy. So you have to make that risk on your end. If you want to move forward with this title company, they're not willing to, endorse it, give you an endorsement or adjust for it. If you want to take the risk, and if you're buying the property for $13,000 and there's a $4,000 water bill and you're not sure if it's satisfied or not, you might not want to do it. If you're buying $1 million property and you know that the most that water bill could have ever been was $10,000 or $20,000, worst case scenario, then you might take the risk because, it's a small number percentage wise. But these are things that, have to be looked into.
Yeah, 100%. Actually, I was talking with a friend of mine yesterday. He invests out in coal country Pennsylvania, Western Pennsylvania and West Virginia, that whole little region out there, like south of Pittsburgh, southwest Pennsylvania. And he was telling me that they actually have to get policies to protect against mine shafts and mineral rights and those types of things. And that's all stuff that, again, when you're writing your contracts, that either your lawyer, I always call it my title company because my lawyer and my title company are synonymous, but that your lawyer is looking out for these types of things because you might not realize you might not be buying the mineral rights to your ground. And I'm not saying we have that issue here. But if you start investing out of state, it's something that you need to consider. And to even I wouldn't even think about worrying about a mine shaft under a property, but it's very well possible that your building is going to fall through and you need to protect against that. And some of it's title insurance and having your title look out for you. And some of it's having your insurance agent work along with your title company to make sure, that you're being protected.
Sure. All right. So Matthew's question. So it's a good question. It's going to depend on where you're located. What, in my experience, and this is since COVID hit, before that, I mean, I've seen deals, I've seen title searches come back. I've gotten a title search back before in one business day. And I had, not since COVID, but before COVID, and maybe, when COVID kind of dries up and everything's back to normal, maybe, but I'm not saying that's the norm, but I have. And the example was, I called the title company. A deal had a deadline to close the next day. It was a reputable title company. They had in-house, an abstractor. So the abstractor walked over, got everything done. I think it was in Montgomery County or Washington, D.C. I don't remember. I think it was Montgomery County. So the abstractor got everything done. They went and did it that day. And then the next morning, they wrote up the whole policy and sent it to us because we had to close that quick. I would say in general, about 4 to 5 days. But from what I'm hearing in Baltimore City, the lien sheets are taking a really long time. So, right. So that's been a challenge. So it depends on, obviously it's going to depend on the county, and it also depends on how, potential mucked up, the policy is. If it's really, really clean, it works. I'm doing a refinance for somebody who we did another loan for on the same property a few months ago. And that process is going to be simple. We reached out to his title company and said, hey, we just did this one with you. They're going to do a bring to date on it. It's going to take a few days. And it'll work itself out. So it'll be quick. So I would say if you're trying to work with a distressed seller, I would say realistically a week. There's lots of loans at Hard Money Bankers that a new borrower is coming to us today and title work's not done, and we'll schedule it for next Friday, and they can get it done with the title company, right? The abstract's quick enough, they'll get it done, pending anything crazy on there, but typically a week. I would say if you're talking to a distressed seller, and you can, tell them if you can buy yourself 2 weeks, that's ideal, just for expectation purposes. But I don't know about you, Ian, but like most of the stuff that we're doing is still quick within like a week.
Yeah, it's really just the title search, the abstract, right? Going into the land records and finding out that everything's squared away is not the issue. Most of the jurisdictional issues, and we work a lot in the city, has really been lien sheets and to get proper lien sheets. And then post-closing, recordings are a nightmare in Baltimore because they don't e-record. I think a lot of other jurisdictions that e-record, everything's good. And that is something that you should follow up with, and I don't think we really touched on it. We only worried about the front side, is to make sure that your title company is also returning any overages you have, making sure your title is actually getting recorded and you're the actual owner of the property. That's why having title insurance is important, but always follow up to make sure that you're getting recorded. You get a copy of your deed, get a copy of all your paperwork.
That's a good point. Out of all the deals we've done, I can tell you that there's a lot of deals that didn't know we were even a lien on the property because they never got it on record quick enough. Either it was in a county that it took a long time or whatever it is. And again, our title insurance is bound, the date of closing, right? So we're good, even if they don't get it on record. But obviously, you want to get it on record. But think about the process like this. Let's say you buy a property today. The title company goes to record your deed, right? That's the instrument that the seller's selling you the property, right? You record a deed to show you're the owner, and they record our deed of trust, which is in essence the mortgage on the property. Those are typically the two things that get recorded. Maybe some other things, but those are the two main things. Now, let's say they go take it down to the recordation office and it gets kicked back for one reason or another. They didn't collect enough funds. There was an outstanding water bill that has to be satisfied, whatever the case is. The title company doesn't get that. And then let's just say, a processor or someone, a clerk or somebody at the title company just drops the ball, forgets about it, and the folder just sits next to them. Well, then you go to sell the property 3, 4, 5 months later, and you go to sell it, and it doesn't look like you own the property, right? I should be pointing this way. It doesn't look like you own the property. It doesn't look like we have a mortgage against the property. Now, again, you have title insurance, we have title insurance, separate policies. So it works itself out. It hopefully works itself out, but it still ends up being a nightmare. It's on the title company's side, but the last thing that you want to happen is they have to go and try to get this thing on record as soon as possible. It can hold up things. On our end, what happens if I get a foreclose on the property and I'm not on record yet? And we've had to do that in the past. So it's important. And most people don't really have, a back office set up to just check when they're on record. You obviously can. Maryland's easy because you go to Maryland Land Rec and check out some of that stuff. Some other states are a little bit harder to access some of that public data, but you want a good title company. So I would say this: if you're out there and you need to find a good a title company, this is what I would say. I would start off by following these few steps. I would say try to find someone who was referred to you by another real estate investor. Now, keep in mind, some title companies don't know much about real estate investment transactions. They typically work with homeowners and consumer transactions, and that's fine. But someone who knows real estate transactions. So you first want to get referred to somebody who knows real estate investing transactions. Number 2, someone who you're comfortable with, who you have a good relationship with, right? Start with that. That's important. They want to give you customer service, and you want to talk to them and make sure they can answer your questions when the title policy comes in, right? In general, the majority of the fees are going to be the same here or there. But it's all about that. We don't really have a preferred title company because the buyers are typically picking them. And when we started in the game and we didn't know as many title companies locally, we were picky and choosy to make sure it was somebody that we were comfortable with, someone big enough that we were, comfortable with. But now that I know pretty much everyone, we're comfortable with almost every title company locally. But I don't want to say they could make or break deals, but it's a situation that you need to have a good relationship with and a go-to person. I mean, I'll tell you, this actually happened earlier today. I just thought about this. We ordered title on a deal. It was a refinance, right? We ordered title about 2 weeks ago, and we're looking through our pipeline. I'm like, why isn't this deal? What's the deal with this? Is there a holdup? We can't get back in touch with the title company, and I'm not going to name who the title company is because we've actually a very good relationship with them on stuff. I don't know them personally, but we've done quite a bit of deals with them over the years. But I don't know if they dropped the ball or what. And they told the buyer, they told our borrower, oh yeah, I never got anything from Hard Money Bankers. And we turned around and said, here it is. It's right here. I sent it to you 2 weeks ago. We're waiting for follow-up. So, who knows? It might be somebody that we don't want to use again because, they can't get this thing done. I mean, in the world of real estate investing, these deals have to move quick, and we all know that. So, it's important to do that. And there's nothing wrong with babysitting them a little bit and pushing them along. And listen, if they come back to you and say, hey, listen, it's the end of the month. I'm working on it. I need to get through all these closings. No problem. Everything has to get pushed to the end of the month, and we're coming up towards the end of the year. So towards the end of the month, things have to move quicker and have to close. So they're not going to prioritize your stuff. But that's okay. Just think about that kind of ahead of time.
Yeah, absolutely. Rodney Banks, speaking of investing in other markets, will you consider underwriting deals located in Illinois, Indiana, and or Michigan? The answer is potentially, depending on what the type of property is. But number 2 and 3 are way more important. Either Illinois or Indiana, I'm pretty sure is check the property taxes. They're absolutely insanely high. Like they're ready to go bankrupt. I think it's Illinois. People are paying insane property taxes. And number 3, it snows there. I think I'm done investing in places that snow. Rodney also has another good point.
That's you looking at it. Me looking at it, I don't do loans. We don't do loans there. We only lend locally. But
he also has another good point down bottom saying that.
So we submitted 6 deals to Hard Money Bankers. This was, I someone remember this, Rodney. This was a while ago. This is well over a year ago, and was able to move forward because there's discrepancies on title work. We received 6 judgments, but later found out there were still liens that were not mentioned in the affidavits. Honestly, I'm not fully following the question, and I don't fully remember what it was. I think you own the judgments, then foreclosed on the properties. This is what I'm guessing, but I'm not 100% sure. You own 6 judgments. You foreclosed on all those properties with the judgments, but there were still liens against the properties. You're assuming the risks of those liens, or assuming you were assuming those liens. So technically, you'd have to pay those off. And I'm guessing when we had chatted, I think at some point you were talking to somebody else in my office, but when we had chatted, part of the refinance was to pay off those liens. So I would suggest this: whoever the title company is, I would ask them if you could structure something and put together that said, hey, I need to know exactly what the payoffs will be per property in order for me to satisfy them and to give my lender the first mortgage on that property, right? So let's say, you have to satisfy them, and it's, $10,000 for your judgments plus another $20,000 in liens. It's $30,000 is what you're owed, what you owe. It could be in multiple different liens or judgments or whatever. So then if you came to us or whatever, and our loan was 60, let's just say, you have 30 in liens that you have to pay off, plus your closing costs, and then you get the rest cash out. So I'm guessing that's where your head is on these. But I would figure out who the title company is, and if you want, shoot me an email directly, jason@hardmoneybankers.com, with who your title company is, and maybe even the title work. And I can look at it and kind of see if we can reconvene on this. I think I remember it was properties just over the Bay Bridge.
More importantly, Pete Belden, I think, is watching us on Instagram. He's supposed to be golfing.
Pete, what are you watching us on Instagram? You should be at Pinehurst.
Pinehurst. Yeah.
Way more important than these two schmoes.
And I think enough real estate. What is that thing in your background? That's a new addition to your background back there.
What, a little planner or the Peloton?
Yeah, not the planner. You're in the Peloton game?
I've been in the Peloton game. That's always in my background.
Nah, dude. That's the first time I've seen it.
The reason why is because the camera's usually on this, like that. Because I've got a big screen here, one laptop here with a screen and my Mac over here. And then I got a TV right here too. But
we should do an episode just on what your setup is.
that TV is not really on ever, but it could be. So this Mac is usually, oh man, that got me screwed up, Ian. So this Mac, I usually stream stuff through this. I usually use this as like my media Mac. So that's why. So the camera would be here.
Oh, there you go.
Yeah, that's why.
Yeah, maybe that's more like
I got a lot of crap in the background right now.
Yeah, anyway.
But yeah.
Well, either way, hopefully that was helpful. Let me just double check Instagram. We got Drew refinancing right now with Vizio. They are forcing me to use their title, but I agree with you on this. Yeah, you can get forced, and sometimes the lenders are picky, especially you start getting into some bigger deals based on who the lender is and securitizations and all that kind of crap.
It's not the end of the world. I mean, so here was a big issue. I don't know if you remember when like auction.com came out and like there was so many online auctions. There's still online auctions obviously as well, but they were forcing you to use like Premier or some of their in-house or preferred affiliate title companies. And not only is that, they outsourced all the processing overseas, right? And it was very, very difficult to communicate. Yeah, now my lighting's all messed up, Ian, but that's okay.
All right, no, you look great, man.
And again, those were nightmares, right? And like we used to have to call some of them and be like, listen, I've done it 100 loans for auction.com properties. I know exactly, like you don't know what you're doing. I have more experience than you know on processing. Like we don't have to do it this way, right? So I'm not against using, a national title company or someone. I mean, I am against using someone who's small, doesn't know what they're doing, and potentially like I don't like using people that don't have like company vanity emails or something like that. I do get nervous. There's fraud in that business. As you know, just because they're an attorney and just because they have an escrow account doesn't mean that they don't have access to that capital. Go Google. I'm not going to tell you any of the. You don't have to hear these stories from me. Go Google title company frauds. It's very, very simple. You wire money to a title company and they don't put it towards the transaction. They pocket the money. This is more scary than anything else, but that's how a fraud could potentially work. So I do like some of the bigger, title companies, because chances are they've been around and have a better reputation. But anyways, going back to your story, they have to use Vizio's title company. Go through the title bonder, read it. Whatever doesn't make sense to you, call the title attorney and talk to them.
Yeah, I know what he's going through because we did one loan with them. It's probably OS National, and they're just a big corporation. You get to one of the regional offices. It's like pulling teeth. They don't understand Baltimore, blah, 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 blah. So anyway, yeah, it can be stressful, and but let me bring you back to a good point about a good title company is recently our title, we did a big refinance on our single family portfolio, and they wanted to record a standard deed of trust for a security instrument. And they said, well, why don't we do an IDOT and you're going to save this much in taxes for your borrower?
That was in Maryland, though. That's a Maryland thing.
It's a Maryland thing, but the bank is actually based out of the Eastern Shore of Maryland, does a lot of work in Delaware, and they just came to Baltimore. And I know in Baltimore it's a real big thing to run the IDOTs. And they're like, we've never had a borrower ask to do an IDOT. So our title company walked them through the whole process, showed them how the security instrument's the same, how we would save money, and how potentially it saves them in the long run. Right. And it's a better product for them to offer to their borrowers. And they said, absolutely, let's do it. So again, having your title company on your side or being knowledgeable in your marketplace can go a very long way. So
that's right, especially on multiple properties, because we cross collateral properties all the time. So somebody might have 3 properties, right? And if they're all in the same, in the same county in Maryland, I only have to record, 1 deed of trust. I don't have to record 3 deeds of trust. If they're in different counties or potentially different states, you might have to record separate deeds of trust. And every time you record, they're paying recordation tax, right? So it'd be thousands and thousands of dollars. So a good title company should know we only have to do 1. And a lot of the times I only need to do 1 title insurance policy over multiple properties, outlining all of the properties instead of doing separate ones. So I agree, it's important. So having someone that understands it is and can help you and communicate with with you is good.
Hey, Rodney, you can find me at ian@equitywarehouse.com, EQUITY warehouse spelled out.com. You shoot me over the deals. I'm not going to do any single family stuff out of state. Maybe some multifamily, potentially some storage deal type stuff. But other than that, we're not doing any single family stuff out of state. So if you find something, shoot it over to me. We're available. And for anybody else, if you have any ideas, any questions, you have any topics you want to discuss, you want to join us on the show, we're always open to have people on and walk through a deal, case study, anything. Again, it's ian@equitywarehouse.com, and you can find Jason at
hardmoneybankers.com. So yeah, this is a fun topic. I know it's not that sexy for people, but it's important. Whenever we talk about title insurance or homeowners insurance or property insurance and things like that, everyone only wants to talk about how do you find deals and how do you find capital, right? And I get it. That is the most important stuff. But like this type of stuff is still important, and you got to understand it. I mean, so many people don't understand how the real estate transactions are done. They just kind of do them and don't think about it, but it'll bite you in the ass very, very quickly. I mean, sometimes when we do loans, I got to be careful of what title insurance company we use, because some title insurance companies are known not to ever pay out on insurance policies, and some just stroke a check, right? They have different business models, right? The last thing you want to do, and we've had to do it, the last thing you want to do is have a proper title insurance policy in place. There's a title claim, and you can't get them to pay out that claim, and then you have to go potentially after the title insurer to pay out the claim that you're rightfully owned. That's happened. So again, this is obviously only like, you can't mitigate all your risk. It's not like, hey, I'm getting out of real estate because of all this. Like, it's all part of it. But, I would say find someone that is referred to you who's a good title company. Make sure they write through a big title insurance insurer, one of the main ones. And, keep an open line of communication with them and make it easy to make it an easy transaction, and everything else will work itself out.
Yeah, and if you don't understand the title, you don't understand insurance, you don't understand any of this, how can you raise money if it's a question that comes from one of your investors, how you're going to protect their investments? So all this stuff's super important, like Jason hit on, and we will catch you guys next week.
Yep, I'm just typing in our emails in here for Rodney because he wants us to chat.
I'll keep chatting. I got nothing else.
We're good. Got him right there.
The Eagles pulled off an amazing win last night. Screw the debate. It was a great game. The Eagles blow, but they did beat the Giants barely. So, but anyway, I got to get on the road.
I think I'll end with that.
Yeah, I'm out.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.